Incredibly, Bruce Kovner made over 21% average annual returns for the first 10 years at Caxton Associates. Before founding Caxton Associates, he worked at Commodities Corporation, where he made over 90% average annual returns for over 10 years. His returns have transformed Caxton Associates into one of the most successful hedge funds in the world. But shockingly, he didn't start out like most successful investors on Wall Street. Instead, he was a taxi driver. Yes, you heard that right. He was your normal local cabbie and later became a billionaire. In this video, we'll first uncover the hidden background story behind Bruce Kovner and how he turned $3,000 into $9 billion. Then in the second part, we'll learn his strategy secrets and see exactly how he made so much money from so little. By the end of the video, you'll have a clear sense of how Bruce Kovner thinks and makes great returns so consistently. Brooklyn, New York, 1949. Bruce Kovner was born, and from a young age he did well academically. He did so well academically that he went on to do an art history degree at Harvard University. It was an interesting subject choice given his eventual career path, and during this time, his attention was increasingly drawn to finance. It was clear early on that Kovner's mind thrived on analysis, strategy, and pattern recognition, which would later help him in finance. Later, he worked for the government. However, he became increasingly confused with what direction to go in his career. He bounced between politics and driving a cab to survive financially. He went from driving a normal taxi to being a multi-billionaire investor. But before that, he was lost, confused, and struggling financially. He had to quickly think of a new way out, or else he would feel he was wasting his potential. Then suddenly one day everything changed when he borrowed $3,000 to place his first trade. He started by opening a position in copper, which made him around $1,000. Not bad for a beginner, but his third trade in soybeans changed things entirely. A supply cut in soybeans meant his $4,000 position shot up to $45,000 in only 6 weeks. Then he made a huge error. Suddenly he panicked when prices dropped. Kovner closed the trade, but he still ended up with more than 5 times the starting capital. However, the experience gave him a major lesson. As he says, "I had a huge gain but lost half in an hour. I was physically sick for a week after closing out the trade." That painful lesson shaped everything that followed. It taught him that protecting capital matters more than chasing gains. Kovner's career in finance began at the American Stock Exchange, where he quickly distinguished himself with an uncanny ability to analyze trends and make profitable trades. He started working at Commodities Corp, where he posted returns averaging 90% per year for over a decade. It soon became clear for everyone to see the great potential he had. However, he preferred to operate quietly while most of Wall Street never even heard his name. With barely any public appearances and no social media presence, he felt free from distractions. However, despite his success for over a decade at Commodities Corp, he became unhappy as he felt the need to try something different. He had a clear ambition to start his own hedge fund. However, he was concerned about his background as a taxi driver and not having a huge amount of experience on Wall Street. What were people going to think? Nonetheless, he felt his experience at Commodities Corp was enough for many to think he was capable, and he was right. 1983. Kovner makes a bold move to start his hedge fund, Caxton Associates. With a strong vision in mind, Kovner set out to analyze macroeconomics to deliver superior returns. Caxton Associates' approach was disciplined, diversified, and innovative. The fund's global macro focus meant it diversified by identifying opportunities from commodities, equities, foreign exchange markets, and more. Here were some key elements from his fund. Strategic diversification with many asset classes. Innovative strategies. Kovner emphasized the development of advanced trading strategies and equipment to keep ahead of other hedge funds. Risk management. Preserving capital was a priority. The risk management systems ensured that even in turbulent market, the portfolio volatility was minimal. Within its early years, the hedge fund achieved impressive returns and demonstrated low drawdowns during market crises. Bruce Kovner primarily operates as a global macro trader. Global macro traders look at major economic and geopolitical trends to predict the impact on the markets. Kovner's focus includes central bank decisions, interest rates, foreign exchange fluctuations, and commodity cycles. He excels at spotting macroeconomic trends before most others and calculating how they'll hit the markets. Let's imagine, for example, that he thinks the Federal Reserve will increase interest rates. He'll analyze the potential effects, while also forecasting how political developments will cause shifts in supply and demand to impact the markets. Kovner believes skilled traders must anticipate various scenarios. He continuously imagines how the world may transform while waiting for one scenario to get validated. Most ideas can be wrong, but if one proves to be correct, it can far outweigh all other losses. Soon enough, a time comes where nearly everything in one mental picture clicks into place. He says, "One of the jobs of a good trader is to imagine alternative scenarios. I try to form many different mental pictures of what the world should be like and wait for one of them to be confirmed. Holding multiple analysis ideas simultaneously sounds impossible, so here are a few lessons I've learned from his approach. First, hire a team of analysts covering every corner of global markets, alerting you when scenarios develop. Second, master technical analysis price action as your gauge for when alternative scenarios materialize. Kovner has the money to hire people, so he does both. But for most others, it would be to master price action. Lesson 1, belief creates reality. Bruce Kovner didn't assume he'd reach millionaire status. He learned under Michael Marcus, who studied with Ed Seykota and Amos Hofstadter. Michael Marcus taught him one thing that was incredibly important. It was that he could make $1 million if he applied himself with discipline. Lesson 2, protecting capital comes first. Kovner mastered risk management above everything else. He learned his primary objective to not lose money early on in his career and follows Warren Buffett's famous rules, which are Rule 1, never lose money, Rule 2, never forget Rule 1. But how does Bruce Kovner do it? He uses emotional control and position sizing. Amateurs consistently size positions way too large. Kovner takes the opposite approach, never risking beyond his emotional comfort zone. My experience with novice traders is that they trade 3 to 5 times too big. They are taking 5 to 10% risks on a trade when they should be taking 1 to 2% risks. The emotional burden of trading is substantial. On any given day, I could lose millions of dollars. New traders often think massive position sizes are required to achieve wealth. Wrong. 99% of traders can't handle the violent account swings from oversized positions. Kovner's solution? Trade smaller. Risk management is the most important thing to be well understood. Undertrade is my second piece of advice. Whatever you think your position ought to be, cut it at least in half. If you're learning something new, please feel free to click the like button. Thanks. Lesson 3, position sizing and predetermined stops. For example, imagine starting with $20,000. You notice Apple consolidating tightly and breaking out at around $100. At this point, Kovner is already one step ahead as he sets his exit strategy before entering. If the price drops below 90, the setup fails. That $10 gap represents the downside risk. Kovner recommends risking roughly 1 to 2% of his account on any single trade. In our example, we risk just 1%, or $200. Size positions small enough so wins or losses don't affect your emotions too much. When trading, predetermined stops are non-negotiable. Before entering, Kovner knows exactly where he'll exit, which he determines by using various factors. Lesson 4. Wait for technical analysis confirmation. Kovner combines fundamental views with technical confirmation. I use technical analysis a great deal, and it is terrific, but I can't hold a position unless I understand why the market should move. Every position I take has a fundamental reason behind it, but I would add that technical analysis can often clarify the fundamental picture. Kovner requires a fundamental thesis for every trade, but waits for confirming price action before entering. He emphasizes cutting losses quickly and sizing positions conservatively. The first rule, never be in a situation where large losses occur for reasons you don't understand. Emotional control is crucial. He says, "To this day, when something happens to disturb my emotional equilibrium and my sense of what the world is like, I close out all positions related to that event." He consistently cuts positions before they become too large and monitors correlations to avoid concentration risk. To highlight some of his most famous trades, we can see he did particularly well over periods of financial market crisis. Monday, 1987. The day would be known as Black Monday as the Dow Jones Industrial Average crashes by 22.6%. But not for Bruce Kovner. He moved quickly to sidestep the crash and traded assets such as oil, bonds, and currencies. As a result, his fund made over $300 million in 1987. Another example is the 1997 Asian financial crisis, which saw the collapse of several Asian currencies. However, it presented significant opportunities for traders such as Bruce Kovner. While specific details of his entire portfolio during that exact time are not so clear, it's reported that his fund profited from the Thai baht devaluation. As a final example, we can look at the 2008 global financial crisis. Despite most hedge funds suffering major losses and the S&P 500 falling by around 37%, Caxton Global Investments achieved a 13% return. His firm reportedly made more than $50 million during the crash after shorting various assets. But these weren't some of his best trades ever. One of his best ever trades came in 2015, after the Swiss National Bank removed the euro versus Swiss franc floor away. Kovner anticipated the move and shorted the market prior to the announcement to make over $240 million in a day. Not a bad day's work. Overall, it's reported he made over $340 million in profit from the trade. Here are some key takeaways from Bruce Kovner. Develop a system and stick to it. Prioritize risk management. Network with successful traders and investors, maintain emotional control, and analyze results. Monitor correlations and overall exposure. Bruce Kovner's journey from a $3,000 to a $9 billion fortune is a masterclass in the key takeaways mentioned above. After launching his own fund, he delivered roughly 21% annual gains after fees from 1983 to 2011. After retirement in 2012, he started Caxton Alternative Management Capital, which invests private assets. But despite his outstanding track record, Kovner stays quiet about his achievements. Search his name online, and there is not a lot of information about him and his success compared to many other investors with similar track records. Today, he dedicates around half his time towards teaching traders in his trading academy. Bruce Kovner is a firm believer that real success is not only found from wealth, but also from sharing knowledge and helping others. His success has helped me view technical analysis in a different way, and his journey from being a taxi driver to a multi-billionaire is very inspiring. I hope you can find inspiration from his success, because that's a major reason why I make these videos. To end, I'll leave you with an interesting quote of his. Success in trading isn't about being the smartest person in the room. It's about being the most disciplined, most prepared, and most adaptable. Anyone can learn these skills if they're willing to put in the work and never give up on their dreams. If you enjoyed this video, you'll enjoy this story about another very successful trader's story here. Please feel free to click the like button and subscribe, and I'll see you in the next video. Thanks.